All right, welcome to The Explainer. Today, we are digging into the absolute chaos in the silver market to uncover a hidden force that is shaking it to its core. It's a story that stretches from the trading floors of Chicago to the vaults of London. But its real epicenter? Well, that's a whole other story.
So, you've probably seen the headlines, right? Silver prices are going through the roof. But here's the thing, that's not even the real story. Something really unusual, something fundamental, is happening behind the scenes. The financial plumbing, you could say, is under some serious stress, and it's revealing a massive shift in who wants the physical metal and why.
Okay, so let's dive right into this mystery. To really get what's going on right now, we got to look at the clues, the signs that this market is under some extreme, and I mean extreme stress. These aren't just numbers on a screen, these are cracks appearing in the very foundation of the system.
Okay, so just think about this for a second. Right when prices are absolutely surging, the main exchange, the CME, just goes offline for 10 hours. And in that blackout, what happens? Premiums for actual physical silver in Asia shoot up instantly. That's a massive clue, right? It's telling us the paper market, the futures, that's not where the real battle is being fought.
So the first big clue? It points right to Main Street, not Wall Street. The data showed this just unbelievable spike. We're talking a 238% jump in activity from smaller, individual traders. Now, the big banks are always in the game, but this was different. This was a new, decentralized army of buyers entering the scene.
But look, that retail frenzy, that was only part of the story. The real pressure, the thing that's really shaking the foundations, wasn't about paper contracts. It was about a desperate, growing demand for the actual, physical metal itself.
And get this quote here, "Physical is king." This wasn't some random guy on a forum. This came straight from a member of the London Bullion Market Association. You know, the heart of the entire global precious metals trade. That's basically an insider admitting, hey, the game has totally changed.
And this right here, this shows you a huge piece of that shift. You've got these big industrial users, think solar panels, EVs, all that high-tech stuff. They used to run on a just-in-time model. Now, forget it. They're not taking any chances. They're aggressively stockpiling, securing like 6 to 9 months of supply. And in doing so, they're literally draining the public inventories to protect their own production lines.
Okay, so industrial stockpiling, that's one big piece of the puzzle. But where is the overwhelming market-breaking demand really coming from? For months, analysts were looking for some hidden whale, some big fund in the Western markets, but they were looking on the totally wrong continent.
Yeah, for months, everyone's eyes are on Chicago and London. They were looking for the usual suspects. But the metal itself was telling a completely different story. It was physically moving, and in enormous quantities, right out of the Western system.
And here it is. This is the smoking gun. The quote from Phil Baker, the former CEO of a major mining company. The physical silver, the very metal that's supposed to back the entire global market, is being packed up and flown directly from the vaults in London to satisfy a tidal wave of demand in one single place, Mumbai, India.
And the scale of this, it's just staggering. In 1 month, India's silver imports didn't just go up, they quadrupled compared to last year. And here's the truly crazy part. This happened while prices in their own currency were hitting all-time highs. That is not normal. That's what experts are calling an insatiable demand. This is the physical flood we're talking about. By the way, if you're getting value out of this breakdown, a quick like, share, and subscribe would be awesome. It really helps us keep these explainers coming, and you won't miss what's next.
Okay, so with this incredible demand shock, the obvious question is, well, why not just produce more, right? Well, it turns out the reality of silver supply is way more rigid, way slower than most people think.
You really can't just flip a switch for more supply. In today's world, with all the permits and regulations, getting a new silver mine from the point of discovery to actually producing metal can take up to 20 years. 20! That means, for all practical purposes, the amount of new silver coming from mines is pretty much fixed for the next decade, at least.
Okay, so what about recycling? Can't that fill the gap? The short answer is no. It makes up less than 1/5 of the total supply, and the infrastructure just isn't there to suddenly ramp it up. It's not like the old days with photographic film. Getting tiny bits of silver out of millions of old electronics is a whole different, much harder ballgame.
And let's be clear, this isn't some problem for the future. This is happening right now. For 5 straight years, the world has been using more silver than it produces. We actually hit peak silver from mining way back in 2016.
and analysts don't think we'll get back to that level again for more than a decade.
So let's put it all together. What do we have? On one side, you've got this historic demand shock, a 1-2 punch from industries stockpiling like crazy and this massive physical drain coming from India. And on the other side, you have a supply system that's fundamentally broken. It's inelastic. It just can't respond.
And what does that create? Well, traders have the perfect analogy for it: musical chairs. You've got all these different players. India, big industry, regular investors, all trying to grab a chair, all trying to claim a piece of a finite and actually shrinking pile of physical metal sitting in vaults in London and New York. There just aren't enough chairs for everyone.
And that leaves us with one final and pretty intense question. In a world of capped supply and literally insatiable demand, what breaks first? It's not a question of if the pressure will crack the system anymore. It's a question of what part of the system cracks. The price? The exchanges themselves? The supply chains? One thing seems certain. The silver wars have only just begun.